Our next panel is entitled Empowering Green Finance. Is this the big chance for fintechs? Now, the fintech ecosystem has the human capital, the skills, and the innovations to help tackle global challenges related to sustainability. The big question becomes, what does all that really mean? Green fintech can be an essential enabler to Europe's transition to a low-carbon future, making green investments easier and cheaper. What's more, the data shows that sustainability is the top keyword when new VCs are making their investments in the marketplace. And also the test for sustainable fintech will be, can they crack into the mainstream marketplace? The moderator for this session is Alex Gibb. He is the co-founder and partner of Catalista Ventures, a hybrid startup accelerator and private equity fund which focuses on startups that benefit people and the planet. Alex has been an investor for over a decade. He's a member of Lithuania's Angel Network and is also a board member and mentor at various NGOs in Lithuania, including UNICEF. He's also right here next to me. Alex, pleased to see you today, mate.
Good to see you. Thanks for having me.
Very
nice.
Pleasure
to be here.
All right, well, I'll let you take your session over. Thank you.
Super. Thanks for the introduction. So yes, we're here and we've been talking about sustainable finance for many years now. And today, I hope you're going to get some fantastic insights about green fintech and what the future looks like all around Europe. And I have a fantastic group of panelists here today who are joining me. One of them is on the screen. We've got three live on the stage with me. So let's make a start and jump in. So let's go first to Dominicus from Launchpad Capital and understand, how does sustainable fintech look from the investment world, from the VC perspective?
So looking from our perspective, it's a fintech company that has a solid business plan, but they also create a measurable social or environmental benefit to the world. So we see it as additional benefit to the financially sound business model.
Very clear and concise. Thanks for that. And Akvila, what about you in the legal world? Sustainable fintech.
Yeah, I of course concur with what was said, but from the legal perspective, I would say that the fintech itself must be, just following the rules on sustainability, on reportability, on attracting the capital, and following all ESG rules itself, and implementing all the policies, having proper discussions at the management board level, etc. Alongside with the investment focus.
Okay, and in my understanding, very often, sustainability is what's sort of beyond regulation. So if I understand, that's also what you're saying, that this need to comply with all rules and regulations are kind of the base, and then there's something on top of that, sort of the non-mandatory compliance with ESG.
Sure, because well, the rules are of course have been elaborated, and at a minimum, the fintech needs to comply with those rules. But there is a lot about mindset of the fintech and its their managers, that they should do an extra mile, how to say, to implement those ESG policies and be cautious of how they are operating itself, because their example, they could foster on ESG implementation on investment level, how to say, or just this business level.
Sure. Okay. So I think that could be something we can explore a little bit more, especially as we're talking with international partners here as well, and also to understand the difference between the different jurisdictions. And in my mind, there's still a very big difference in how people perceive sustainability and ESG requirements in different countries, even within the European Union. So let's perhaps come back to that as well. Okay, so Roswalde, what about you?
Yeah, so I have two parts to this question. So first part is a sustainable fintech is a company that by using the technology enables sustainability within finance. So it provides ESG scoring, it helps to offset the emissions, helps to do the reporting. But then the second part is it's a sustainable company in itself. So it aims to, reduce the emissions, conserve water, conserve the biodiversity, be socially responsible. Just that's how I see it.
Okay, and for you, how important then is the sense of economic sustainability? The ability to actually make enough money to survive operationally and into the longer term.
I mean, it's the main purpose of a company is to make money. But if you don't make it in a sustainable way, your profit is just short term. If it's sustainable, then it's long lived. Thus, it's more important. Because from the stakeholder theory, the aim is to aim for the long term profits, not the short term.
Okay, so I think we've got sort of a common understanding around the table, as it were, in terms of the economic sustainability, the social sustainability, and the environmental sustainability, all in one there. So maybe let's start off by taking an overview of the sector and trying to sort of set the scene. How do we all see fintech today, and sustainability is a word which has been around already quite a while. We see some sectors which are more developed, but in terms of the fintech sector itself, how much are we seeing in sustainability today? So Dominicus, maybe you can start with that.
So, yeah, I've recently analyzed 60 companies working in sustainable finance in Europe, and there is a clear trend that majority of them are working in data field. So basically, they're helping the commercial banks, the corporates to become more sustainable by using open data and various sources of data that they can find in the market. There is a group of banking providers that are saying that they're green. There are investment platforms and others, but I think data is kind of the key sector in Europe, at least as of today.
Super. And then I guess one question that springs to mind there is: are those data companies sustainable on their own? In the sense of the environmental impact that they're having. We all know that the data is consuming huge amounts of power. Are these data companies, are they thinking more about the sustainability of their clients as well as themselves, or only their clients?
I think they're only thinking about their clients. They see themselves as technological enabler for green finance, and if they can move the billions of capital from the commercial banks into more sustainable field, I don't think they necessarily have to be that sustainable themselves. I mean, the impact that they're making at the client side is already quite massive.
Super. Good understanding. And T, then, what about you? You mentioned financial institutions in your opening, few words. Do you concur with what Dominika says? What's your view on that?
Yeah. Like he brought up some great points, of course. I mean, like I could speak from our example, we are certainly trying to reduce our own footprint, like as much as we can. But at the same time, it is also true that, like in order to enact as much change as we possibly can and, to have as much leverage over the overall system, we do have to do some behaviors that are not that green right now, right? Like I myself have been on a lot of flights lately, and like that's unfortunate. But we do try our best to sort of get the most leverage for our activities. So yeah, from that perspective, on the existing, financial institution, sort of the legacy side of things, which was your question. I mean, obviously, I think the more innovative and progressive ones basically see and have the hypothesis that sustainability is the new digital for them, and that this is the biggest seismic change to actually hit finance globally in like anyone's lifetime, and that that's accelerated by all of the market sort of draw there around ESG pressure around the actual share price and in the boardroom, the consumer pressure around sort of doing business with brands that are considered either green or brown, and that they do have a choice, and indeed the like impending regulatory structures like the EU green taxonomy and such that will actually force these financial institutions to understand their exposures and then do something about them. So basically summary statement for that is, of course, our hypothesis is as well as, sustainability is the huge new vector for finance, and that these firms have to, they've got a dual mandate to get their own internal operations in shape, but also help, their existing clients and partners as well.
Super. And T, could you just remind us where you are physically in the world today, and then maybe just a few comments on how you see the ecosystem from your perspective in that region?
Yeah. So I'm based in Munich, even though I'm actually from the United States, and spent 9 years in London as well. So I've spent some time all over the place, right? Would love to join you in person next time. Thank you. And from our perspective, sort of locally here in Germany, there is a lot of activity on the startup side. Like I work for Doconomy, which is a Series A climate fintech startup based in Stockholm. We were probably one of the first sort of climate fintech startups in like in that niche 3 years ago. You see a lot of activity here in Germany in that space. There's probably like another 5 to 10 startups that have done great with their funding. Anything from the sort of neo-banking side to the supply chain, like analytics across scope 1 through 3, and indeed some very innovative carbon accounting startup players as well, based in Berlin. Up in the Nordics, of course, like that's a very advanced sort of society around the sustainability and the tech topics at once, right? So you do see a lot of startup activity there, and we're starting to see more things happen out of London and France and Spain, like as well. So yeah, there's a lot of activity, and that sort of definitely mirrors the things that are also happening with our friends in the United States, where like there's a lot of things going on in both the East Coast and out in Silicon Valley too.
Super. Thank you. Thanks for that overview. That's great to hear. So maybe we'll go to Rosvaldas next and hear a little bit, how do you see the ecosystem in Lithuania, in the Baltic region more generally, given that context we have from sort of Berlin, Munich, and Stockholm?
It's really in an infancy stage just now, because the companies, the fintechs, funds that aim to sustainable investments are just now starting to emerge. So we have only one single pension fund that solely invests in sustainable activities. Whereas in let's say, Germany, you have just hundreds of them at this point. So we're really early in this sustainable finance game in Lithuania. But I think the problem that's stopping us a bit, and Akvilija will add, is that regulation is really behind at this point right now, because even the taxonomy is not fully out yet, so delegated acts are not prepared yet, and it's a bit of a guessing game at this point. So I think those are the reasons why it's not as popular in Lithuania as I believe it should be or could be, and that's why I think it's going to be as the regulation progresses.
Okay, super. So, Akvilija, do you agree? Is regulatory change the key sort of turning point for companies and organizations to really engage with sustainability? Is there another factor? What is it for you?
We as lawyers used to say that, life goes first, to the regulations. And there were a number of examples when, the businesses brought some new novelties and only the regulation followed. With the sustainability policies, there is an issue, that it was not so widely discussed topic, and for the finance sector, and especially for fintech companies, which are quite new, etc., and they are there to conquer their market share. It's quite just maybe not on the first point of their items to solve that, just to be sustainable and things like that. But I would say that again, there are proper examples in the market, that without regulation, they understand the need for, sustainability, and they are basically authoring the business ideas, and they are pioneering that. So yes, the regulation always, just lags behind, but it's in all the spheres, it's very rarely that, regulation comes first and only the business adapts.
Yeah, and then if the regulation did come first, could that be could that force a major change?
Sure, that could force, if the regulation is supported by proper enforcement, because, regulation without enforcement basically doesn't work. And I think those, EU initiatives and the actions done by the Lithuanian government, because there are also, just a number of actions planned to support the sustainability efforts, they will bring, the market, and they will force the market players to adapt to ESG, and I remember, when the Bank of Lithuania told to our prosperous prospect clients of Fintechs that were applying to receive licenses, how do you comply with ESG? They were firstly Googled, what is ESG? So, but, just the more we talk and the more, there are initiatives on the political level, of course, that would force the companies to think of that and how they are meeting that, not only on paper but in reality.
Super. So, Rosvaldis, you're nodding your head. You're saying that public policy, whether at national or European level, and regulation is really a key factor. And I'm also curious then, what's then the role of fintechs in innovation, and how important they're playing in this. What's coming first, the horse or the cart? And
I mean, the innovation is first, but the problem is when you don't have a proper regulatory environment, new companies and new businesses are afraid to introduce their new ideas because you have gray areas where you're not necessarily sure whether you're actually complying with it or you're not. So, and that's a huge gray area. Because even at this point, I talked with fund managers who would be willing to go into ESG investing, but they are not sure yet. Because according to them, the requirements to be considered environmentally sustainable are not clear enough yet at this point.
Thanks.
But the innovation always comes first. Or I would say the demand comes first, then you have innovation that aims to support or to feed that demand.
Okay, so to summarize then, it's sort of, still very early stage in the sense of the ecosystem, and the sort of more institutional players are really waiting for this clarity on the rules and regulations before they go, deeper into the market.
Oh yeah, I would say it's extremely early at this stage. Even if you think about just finance as whole, investing as whole, investing has been happening for, thousands of years at this point. Sumerians used to make financial derivatives like 3,000 years ago. And you have only like 2 years with ESG investing. I mean, you have more technically, but you have regulations that are only like 2 years old. And proper sustainable funds or sustainable investing, that's only 2 years old. So that's nothing. That's, few centimeters from a mile.
Thanks. Good analogy. Good analogy there as well. And what about in the private sector? How important is regulation? How much are you waiting for fintechs to innovate and take that step forward?
So actually, it's an interesting point because we as investors, we see regulation as a risk as well. So if there is a regulation already in the market, or the regulator is saying we're going to put some extra regulation in the ESG market, so we see it as additional risk to already a risky investment, right? So maybe one of the things why a lot of companies that I've mentioned in sustainable finance are working in data, because they're not going to be regulated. They're just helping the companies to make better decisions. So I think from my point, I agree, regulation is good. You have to have clarity, but I wouldn't necessarily say that it's good for venture capital investments.
Super. And T, what about you then? I mean, in your business, how much does regulation play a role? How much is it shaping you?
Yeah.
Maybe you could just give us some examples as well, please.
Yeah, exactly. So it's not, like anything that is actually forcing a requirement, yes, yet for our customers to buy our services or anything, right? That's not the case. Most of the impending sort of calculations and measurements and aggregations and everything are more focused on the B2B sort of wholesale side of banking, right? There is a slight caveat to that, like around mortgages, right, for individuals and families. And, those mortgage portfolios do get rolled up and analyzed for green bonds and, for sustainability disclosures as well. But that's not our first set of products, right? Like we're on the really granular sort of transaction by transaction basis for the consumer, right? So there's no sort of pressures there from the regulatory side. Now, if you step back really far back, right, and you look at like the market drivers, that can drive the behavior of these larger institutions, that's where we do see some of this. It's sort of implicit, right? So no one's forcing these banks to actually do anything on the consumer side, but because they are forcing the banks to actually think about the enterprise side of things, and it starts that long conversation at the boardroom, which then trickles down, throughout the management layers of the organization, where they also have to make their net zero commitments and everything else for their shareholders and for their own operations, like we talked about earlier, right? And then as that trickles down, then it inevitably, then touches some of these other things like the consumer side. So it's not a direct benefit for our business at all, but it has added more, sort of strength to the broader ESG conversation, in that, like these institutions have to start doing something, right? And so that is a good thing for us, because we're trying to, empower the consumer to actually make more sustainable choices through the way, they actually, do their own personal transactions.
So if I go back to what Dominicus was just saying, where he sees regulation, as much of a risk as anything else in many cases, you're saying sort of the opposite, and that's actually kind of also helping consumers and businesses on that journey towards higher awareness of sustainability and actually engaging in it.
Yeah, I mean, he's exactly right. Like on his very specific point, because I was an investor for 9 years myself. He's 100% right. Like when you're looking at a market and a new technology, you don't want to be on the wrong side of the regulatory activity either, right? Because that can almost overnight destroy your business. So someone with the actual startup investor hat on would be very concerned about where those things might actually shake out, because of the various opportunities and sort of business concepts like that are coming across their inbox for them to fund, right? So what I'm talking about like is on the outside of the investor landscape into those green fintech startups, but more on the operational side. I completely agree with him as well. And we are, like in our first set of products, a data business, in order to help, like the financial institutions and their consumer clients make smarter choices, right? And, the regulatory activity on that at the moment, like is basically non-existent for these particular types of cases. You can imagine a world soon where there starts to be conversations in Brussels and abroad about how GDP PR, gets in the way of the data that we need to actually drive, more sustainable consumption, And so, like that can be a slightly controversial topic, by the way. And, so I don't want to get too far into that rabbit hole, but you can see how these things they can be at odds, right? Where you need the granularity, like of actual personalized data, like about each person or family or a business, but you need that data in order to drive the best insights, for sustainability purposes. But if you don't have access to that information because of privacy concerns, then you've got handcuffs, right? And so we've certainly seen that around the sustainability fintech side as well. And like that's something that we're going to have to address in time, but it's not quite on the Brussels agenda quite yet.
I think exactly that. You've got something that's already extremely complex, which is fintech investing or creating a successful fintech, and then you're adding another layer of complexity on top, and making sure that sustainability is a core part of that. So it is a challenging and tricky space to be in. But the benefits and the impact can be enormous when we get that right. But maybe let's jump in now then to a couple of examples. Maybe we can take sort of an example each of a green fintech or a fintech which is having a positive impact on the environment or the planet. So Dominicus, you want to go first?
Sure. I think it's an interesting story. Like I found one of the neobanks in I think they were from Germany, if I remember correctly, and they were saying like, oh, we have this card. We do this banking app. We do it better. We only invest in green and social. And I immediately registered. I was very intrigued by, the sustainability angle. But then I started thinking, I have my own neobank already. My friends use it. And if I'm going to switch to a new neobank, like, is this going to be really good for me? And will I have a good user experience at the end of the day? And I decided actually not to. And, it's interesting because I support their idea. I support the mission. But if I'm already locked in one neobank, I wouldn't move to another one. So, I think this was a great case for me to see that I think the new companies, the new sustainable fintechs that are coming into market, they have to, in my opinion, create white label solutions. For, let's say, in this case, maybe you can create a white label solution for neobanks that would help invest the money into sustainability, instead of becoming a new neobank yourself. So it's like saying, don't become a new green Facebook, but help Facebook become more sustainable.
Good, nice example there as well. And Akvila, in your world, I understand with client confidentiality, you can't sort of give away certain names, but any examples that you would like to talk about?
Yeah, I did some research prior to this event, and even talked to some of our clients, just how they pursue this, sustainability business. And I must admit that, none of my clients, was feeling comfortable to say that, I'm sustainable. And even the ones, just who could, just again on no-name basis declare that, just they are doing some part of sustainability, they, went just talking to them, more deeply, they are saying, no, we are not a sustainable business. But again, just I think that. Of course, there are those, like big companies that could, do a little, a big impact on this, on the ESG level, but. I would be very keen to see, the small players, for example, P2P platforms, crowdfunding platforms that are very local, localized, for example, at least in Lithuania. And I would, want to see them, for example, as I think there is a P2P platform in Australia that basically declares that, they are raising money from society, and they're investing that only in green projects, and they're really small projects, just I'm building, some solar, plant basically myself, or just basically very minor ones, but they are, those minor things, they ball up into some bigger scale, and. I talk to our crowdfunding platforms, whether they, just are thinking of bringing, this sustainable, field in their investments, and saying that, we will support that. I don't know, just offering some economic incentives, but the answer was more or less, we are too small as a market, and you can do that in Australia, but to do that in Lithuania with 3 million of citizens, it costs quite a lot. But I think the more are there, of good examples and good success stories, maybe our local players will be willing to take this path as well.
Super. I think nice tip for the audience and a nice vision for the future to look into P2P and how you can enable the financing of green projects around the world as well. Super. Thank you. Rosvaldas, what about you?
Yeah, I have two things to say. I have to add to Aquilia. Crowdlending is really important in this area right now, because many of the new companies that aim at sustainability, so let's say companies that aim to build solar panels, they often do not get loans from banks, but crowdlending is often the way to go to raise the financing and to install the solar panels needed. But I'll give a different example. So in Europe, large companies need to have emission permits for the CO2 emissions and a few other ones. And those permits are tradable on the market. So few algorithmic funds came up with the idea just to trade those permits. So the price increased, I think it doubled in the last year or a year and a half. So what happened? Companies now have to either pollute less because it got really expensive, or they have to just innovate and make their their production more efficient in terms of emissions. So that's how I see it. I think it's a really good example of how fintech, whether intentionally or not, actually was really beneficial to environment.
Super, super. And then I think if we then go back to sort of the financial system more broadly, I'd be curious to know, which area of the whole financial system would be most ripe for disruption by green fintechs. So, I mean, Akvila, you mentioned on the P2P, Rosvaldas, I think you said before on pension funds as well. There's a bigger opportunity there. I don't know, T, any thoughts from your side? What else is the next big area to be disrupted?
No, it's great, right? I mean, it's sort of an adjacent point, right? I mean, like a group that I've seen out of Silicon Valley called Banyan Infrastructure, which is a green fintech firm that's doing a lot around trying, to basically speed up the process around project finance, right? So like if you reverse engineer like all of the things that we're going to have to do, through infrastructure, whether that's green hydrogen or, solar or wind or, carbon capture and storage or any, like other types of explorations, that all requires, non-equity type of finance, that's at the actual project level, right? And most of the time those things are financed through debt instruments, and that stuff can be incredibly time-consuming, very, very manual, normally reserved, just for like the larger or specialty banks to actually do those projects. But we're going to need those kind of projects at a scale that the world has just never seen before, like in the next decade, right? So there's certainly like a big opportunity for firms like Banyan and others to sort of step in there, use the alternative data sources, write the algorithms to sort of pre-package, like these opportunities based on the risk vectors and, the actual, in locations of the projects and everything else to sort of pre-package these debt instruments up. So, that, like an entire host of parties and investors, pension funds, consumers, companies index funds, anything could sort of buy and sell slices of those projects as well. That would, and again, further accelerate like the amount of money that's actually going towards things that can better the planet.
So I think that's another nice tip for the audience to be able to say, go in, look at project finance, see what you can do to disrupt it.
Yeah.
That's a great opportunity with a big impact. So gives us a lot of hope for optimism on that one as well.
So I think I would agree. I think the next big thing, in my opinion, is unlocking the retail money to go into green finance. But the retail wants high risk and high returns. Why do people now invest in Bitcoin so much? Because it's so volatile, right? It moves up and down. It's interesting, right? You're not interested in investing for 30 years with 2% yield. I mean, it's not entertaining. So I think like the market, it needs like green investments that would be high risk and high reward as well at the same time.
Super. I think really good analogy there with Bitcoin and putting that into perspective for us as well. So maybe let's jump a little bit to thinking. We talked a little bit about public policy before at EU level as well. I mean, in terms of these opportunities that are out there, what else can we really hope for? Agvila, is it still sort of regulation with enforcement? Is there something more? What can we really hope for from the European Union in the next couple of years?
Yeah, I think, European Union, they are working on ESG matters quite heavily now. And, just recently in July, they announced, this renewed action plan. And basically, I think that, we will see a number of actions, delegated acts, directives, just followed by also national measures aimed to firstly, I think recognize, ESG and sustainability as a topic to bear in mind for every business, and especially the businesses that, are prone to regulation, like finance sector, we usually laugh, that if you want to test something, give it to the, finance market players because they are used to regulation and they will comply with everything. So I think the same will go, with sustainability topics, that they will be the ones, to test everything. And apart from the just taxonomy and other regulations, as I think we will see what was just talked by T and Dominikas, the deployment of retail money into the green finance, because it's one of the tasks of the announced by EU Commission to open up, this retail money and green finance and just, link them to green finance, and more specifically to enable small and medium enterprises, just to access green finance, just basically for their, some sustainable projects. So I think that that measure, it will be one of the main topics of the Commission.
Super, really good overview. Thanks for sharing those thoughts. And Roswaldus, is that something that's in line with your thinking?
Yeah, it is. I just want to specify a few parts of it. So one is green bond standards. T mentioned it, and green bonds is a huge thing right now. Even in Lithuania, we had an emission of, actually don't remember the exact number, but I think it was like 900 million, which is a lot for Lithuania. So green bond standards is definitely going to be an important thing now. Another important thing is going to be data, and it's not going to be standards. I think it's going to be a really hard-lined regulation of it, because there are some really serious problems. If I can give you an example quickly, there was a research done. So they took 4 data providers, and they took their scores, ESG scores of companies, and they replicated the same index using ESG scores of those companies. And it was just widely different. I mean, there's no standard at this point, and data is a problem. So I think the regulation, or the hard regulation, is moving towards there. But the softer regulation in terms of just standards is going towards bonds and just in general of what's considered to be sustainable.
And in terms of the time frame, for harmonizing these differences, what do you think we're talking about there?
I mean, I think Aquilia could be more direct with this answer, but I think the time frame is. I think it's 3 or 4 years from now. Okay. It's something like that. I'm not 100% sure, but.
Sure. So, Aquila, what are your predictions for the future?
I think that we will see that within 5 years period. Although the EU Commission is as said, working quite heavily, but still it's a big, big institution, and it takes time, after they run all the consultations, etc., to draw up papers. But I think that, the next, 5 years is the time when we will see the most of the regulations passed and, data regulated, whatever you call it. And yeah, just for green bonds, etc., it's already there. Just I wouldn't say that it's quite a novelty, and maybe, there will be some more, measures like, sustainability-linked bonds, etc., which is not so common as green bonds now. So, but yeah, I think the timeline is 5 years, and to reach that goal of net zero emission by 2050.
So let's hope that when we meet again here on stage in 5 years, both of these will there'll be a perfect match in the data scores so far. Great. Maybe let's then move on to the next topic of risk around working with sustainability and green fintechs, and in particular with greenwashing. We've talked a lot how it's it's still in its very early stage in terms of the industry or the sector. There's I think still a lot of mistrust by consumers in the space. So what can we do to really minimize the chances of greenwashing and strive towards that really positive impact that I think we're all genuinely interested in? Who'd like to go first?
So I would say we can see some similarities with audits, right? We trust the financials because they're audited. So I think we need to bring in third parties to audit the sustainability, reports or claims and things of that kind, and then then these reports can be trusted, and that's how we can avoid greenwashing. And I think this is happening quite well in Europe and the United States, at least, where the third-party verifiers are helping us to, see what is what actually in the market.
Cool. Okay. So clear answer on that side.
Yeah, I would like to add, that as a lawyer, firstly, I would like to see, a set of standard which is very understandable, user-friendly, basically to meet, because, I have clients calling, just and asking, please explain, the taxonomy regulation, because we really fail to understand what's written there, and that's a problem with, all those measurable factors, because they are so vaguely drafted, and it takes really big efforts to follow them. So I would say that firstly we would need, just to start with very simple, clear rules how to measure whether a business, a fintech, is sustainable or not, and then we can deploy, external auditors or consultants to say whether you are meeting them.
And I guess that also comes to the language of the rules, not just the rules themselves, but really that language.
Yes.
And that's especially with fintech, where we've got lots of dynamic young people who are not used to complex legal terms. So great, good insights there. Thank you. Rosaldus, what about you?
Yeah, I have to agree with the standards, because even if we talk about debt instruments or sustainable debt bonds, there's no standards as of now, which means you could just go and issue sustainable bonds tomorrow if you wanted to, and no one would know. I mean, people would know, I guess, but you could do that. There's no standard at this point. But I think it's just a classical, pears versus lemons problem, where the main way to solve it is just to have as much easily available public information as possible. So just a really, really simple example. If you have a lot of, just horrible reviews of an employer, you would assume that socially something's wrong with that employer. Nonetheless, it says it's super cool, and good. But if you have all those terrible reviews, you would just automatically assume something's wrong. So I think public information is the main key to differentiate between something that's actually sustainable and just a lemon.
Super. So public information there as well. Something more?
Yeah,
Gunnar?
and I was also thinking, that from regulation point of view, just we have those, eco-label products, etc. So, for fintechs, the regulators could think of some, not a simple license, but, like sustainable license to promote, sustainability on basically, that you can label yourself proudly that you are a sustainable business. But that's, of course, for politicians to think of.
But this is a really good example. A few months back, I remember meeting an entrepreneur who was showing me a new box that he'd created, and on the box it said, recycled, recyclable, sustainable product. And I said, oh, really? Is it how did you come up with this? And he said, no, it's just cheaper to pay the fine when you get caught. So, I was totally mind blown with this one. So I think there's a really big risk in this area.
Sorry, can I tell you another example?
Please do.
So I'll actually name the company as well. So Shell had leaky pipes of gas somewhere in Africa, and they didn't fix it. They just paid the fines because it was cheaper.
Yeah.
But while paying those fines, they were releasing corporate social responsibility reports. So it's
So very, 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 very tough one on that. Yeah. And T, what about you then? Any examples from your side and thoughts?
Like I think my friends on stage have already said, some great things. I would just add a little, like if we zoom out for a minute, I'm encouraged, like if I take the glass half full sort of view on it, I'm encouraged. And that is because, like I just take my own sort of personal example of being involved in this space for the last 3 years. The rate of change over, the actual public outcry around greenwashing has been significant, right? So, if we think about it, we have basically just created a brand new market, right? Like around sustainable finance and the awareness of the implications of sustainability into the financial system, right? Like that's really quite new if you think about it, like on the historical scale, where every financial institution in the world is now, having to think about this, right? And so, like even 3 years ago, the outcry around greenwashing was only really around some of the ESG focused funds, maybe having things, that were quite high scoring around S and G, but yet were incredibly bad on E, right? And now you actually see it. There's a lot more activism involved around, greenwashing, and there's a lot more noise around, trying to hold those organizations more accountable. At the same time, us fintech entrepreneurs, and investors, and like a part of the value chain, like some of my friends on stage, of course, through some of the services firms and everything else, we're trying to build the infrastructure, to actually have the data layers, to have, like the publicly available information, to have the standards, to have these things there, so that it is a lot harder to hide, right? But it's a great sign, like if I take the optimistic view that the outcry is already so loud and so strong, even though we are still so early in this new market.
I think all of you have said in one way or another, it's this element of transparency, right? So where's this coming in? Where is this light being shone? Whether it's in with Shell in Africa, whether it's with regulation and so on. It's really got to be this next wave of transparency, and of course the internet is a great enabler in terms of bringing information around greenwashing around these companies. So let's hope we can be positive in this context. And let's think then. I mean, we've covered a wide range of issues. I think you've all given some really good examples. This has been great. We've taken the concept of green fintech from different angles. Are there any trends that we haven't covered or touched today? Any other trends that you can think of that we'd like to bring to mind? T, anything else from your world?
Yeah, I was just shaking my head because I was about to say no, but then I just thought about something actually that's gathering a lot, from the entrepreneurial scene, and that's the carbon removal startups, that might be starting around offsetting, but that are actually trying to hit the negative emissions targets. I mean, obviously, from all of these net zero commitments across the world, 2040, 2050, anything there. If you dig into those assumptions, like in those mathematical models, they're almost all based on, like a fairly large amount of negative emissions, right? So like that's actually taking carbon out of the atmosphere.
Yes.
Right. And the various combinations of the ways that you might conceptually achieve that through natural sources. Obviously, people talk about forestation and afforestation and things like that, which do have a lot of challenges, because if there's ever fires, then all of those emissions then get released back into the atmosphere, or some of the other things like direct carbon capture, which are still, they do work, but we have never seen them at the scale that are required for us to actually have a chance to hit these targets. So there are various green fintech entrepreneurs and businesses that are being started to help accelerate that, to sort of apply sort of these great fintech themes that we've seen over the last decade around APIs and machine learning and sort of infrastructure layers to kind of help do those things. We partner with some of those businesses as well, like they use our calculations, and then, that gives the organization or the consumer their footprint, and actually gives them, like the amount of tons of CO2 that, should be compensated for by their behavior. But there's going to be a lot more of that activity as you try to bring these great projects from all over the world into these marketplaces that can then get the access of the supply of capital to then allow those individual projects to scale, with significant leverage.
I think you've touched there on carbon capture technology, which is an extremely exciting but complex deep tech, I guess. I mean, Dominicus, what do you think? I mean, is the future then now more going to be about the hardware or the software, in terms of the green fintech's ability to have an impact on sustainability?
I think hardware is going to play an enabler's role to kickstart the software revolution. I think IoT is going to be the next big thing in the green fintech space, and I think this is going to scale the software usage in that field.
Okay. And then as we're sort of coming towards the end of our time, we've talked quite a lot about sort of the early stage of the ecosystem, the green fintech ecosystem in Lithuania. And I mean, yes, we're probably not a mainstream audience that's sitting here talking about this. It's probably a relatively small group of us. Again, looking forward in the next couple of years, what will it take really to get green fintech into the mainstream? Where will the adoption come from? Where will the awareness come from? Any reflections or thoughts on that?
Go ahead.
I think apart from several pioneers that I expect to see, in our local markets and, more in the Baltics, not only in Lithuania, to bring, sustainability in finance sector, I think that we will see from the regulation point of view and from our, regulator, the Bank of Lithuania, bringing some, reportability, some, measurability of sustainable factors, and that would bring, fintech sector to think of sustainability and, just to implement those practices in their, operations, and, mitigate, just, addressing the sustainability risks in their annual reports, just how to mitigate them, etc. So I think, at least from my understanding, we will see, the kickoff from there, that basically there will be some, just requirement to put, sustainability risk into just as, one of the factors in your daily operations, and that will basically force the fintech society to think of how to become more sustainable.
So the regulatory aspect, and then also the transparency in reporting and communication around activities. Okay, clear. Thank you.
I would say I would like to see three things. So one is more data, so our discussion can be enriched with more numbers. I would love to discuss the strategy that not only the European Union has, but the countries, individual countries that they have. And I would like to see more people going into this sector. I think, there was a study of values of the people who are starting universities, and sustainability is among the few that are growing every year of importance to the students. So I think more and more people are becoming aware. We just need to create the opportunities for these people to realize their potential in this field. So data, strategy, and more people in the field.
Super, and that's really a strong trend that I see in Lithuania, is that, the younger people who are coming through this next generation of entrepreneurs, it's not just about making money, it's much more about purpose, it's much more about having an impact, and I think this is really, really encouraging as well. Rosvaldas, what about you?
Just demand creates supply, and there is definitely demand for sustainability right now. So supply shall be created, and the value shall be created as well. And just a simple example, so there are stocks currently that are considered sustainable, and they're not necessarily the most profitable companies. So in terms of their PE ratios, they're quite expensive. But just because of the demand, the price is inflated. It does create value. Thus, investor is happy, So it's just demand creates supply.
The economist talking. Thank you. Excellent. Good insights. And T, what about you? Sort of final thoughts then on the future.
Yeah. No, that's great, and it's related to everything that we just said. Is this we've got to get all of these, more sustainable products and services in the hands, of those folks who actually need to use them, right? So that they can see, that the true deltas here aren't as big as you might think. There was a BCG study out, I think, 6 months ago or something, that the actual delta in the behavior was only 4% between society's ability to actually hit the net zero commitments, to hit the Paris Accord, and then what we're doing right now, right? That if you really get into the supply chains, and did the cost benefit analysis of, some of those substitute materials or services, that the actual differences are not, as, seismic as you might think, So it is going to require a massive effort to actually do that on a global scale. But at the same time, if we can get these more sustainable products and services in the hands of small businesses and consumers to, fuel the demand, as my friend on stage said, then we can start the behavior change, in a very organic way.
I think that's a wonderfully optimistic note with which to finish the panel today. So thank you. Dominykas Stankiewicz from Launchpad Capital, thank you for joining us. Akvile Vosaite from Cobalt Legal, thank you. Rosvaldas Krushna, our green finance expert, thank you. And T. Pruitt from Doconomy, all the way from Munich on the screen. It's been a pleasure. Thanks to Rocket for hosting the panel. And hope you've enjoyed it and you've got some takeaways and some optimism for our green fintech future. Thank you.
Okay, thank you very much, Alex, for moderating that really interesting session on green tech in fintech. Now, everyone these days, I mean, I'm sure on every VC list, every startup list, oh, it's green. Oh, we're very green. We know how to do this sort of stuff. Do you think there is more or less, I don't know, green potential in fintech than any other industry?
I'm not sure about any other industry, but in general, we've been given a lot of optimism today by the panelists. We've been given some fantastic insights into the trends that are happening, the sectors that are hot, opportunities to scout and explore if you're a fintech or a new entrepreneur ready to start. So, yeah, I think overall it's lots of opportunity there, and we've got a bright future.
I mean, is fintech tied to green? Does it, if I'm thinking about a startup in green tech or something, does it have to be green, or is it just for some reason there's a natural synergy with this emerging market that we may as well make it sustainable at the same time?
I mean, naturally, I want it to be green. I think it's definitely not a given, and I think really a lot of what we're seeing today is around the footprint of fintechs is growing, and it's something we need to address. So I think, in order to hit longer term targets, we really need to take this on. So again, I'm positive that we'll do it. And then I think we also heard at the start of the session that it's not just about being green or sustainable for the sake of it, but it's also really solving problems and finding solutions for consumers and businesses that are working with technology.
Okay. I'm very fascinated in the green fintech sector that we've got finance. Okay, so that's very traditional, very stable. Then we've got fintech, which is this weird on the edge. They're the rebel cowboys out the front, working in the space up the front, being those rebels, changing the rules in a very conservative. And then you add green on the top of all of this again. How is all that mixing together, shaking up an industry and then reshaking it again with green? How do those, I guess, even culturally, how do they interact?
Yeah, so I think when fintechs are going in to disrupt financial services as we know them today, then they're not necessarily thinking about sustainability and being green from the get-go. So this is something that we have an opportunity to help them to explore and to grow into. That's one thing, but it certainly makes it a lot more complex. So, in the panel, I think we heard a lot about the shape of the scope of regulation, of communication, of transparency, all of these factors all coming in. So it's, really, it's been a good discussion.
It's interesting. The Cowboys are going to have to bring it in just a bit, just enough, not too much. We want to keep that spirit in there.
Keep the innovation spirit alive.
There's always going to be, the regulator is always going to be knocking on the door whenever we're talking about anything financial.
Sure, but we also heard today that there was this sense of fintechs as the enablers. So fintechs are enabling the ones who are being regulated, and very often if they're already regulated, they know how to deal with that regulation, play by those rules, and then have a positive impact from there.
Okay. Is there a feeling that as much as, and I keep harping on that we've got the adventurers, the cowboys, the pioneers, the startup ones, that because it's fintech, there's some idea as well, like, we wouldn't mind a little bit of regulation because a little bit of government oversight, not too bad in these things, maybe not too much. Let's, easy on their government.
I think the key issue there is really around clarity of rules, around the language of rules, and really making sure that the fintechs and the entrepreneurs that are working in this space have clear and understandable guidelines that they can work with. So this is what I would say is the real most important issue there.
All right, very good. All right, Alex, thank you very much for leading our panel today. It's been very informative.
Thanks for having us.
Thank you.
Cheers.
Cheers, mate.